US oil spot. And on the US oil spot, we have an interesting situation going on right now. Remember, yesterday we started buying the US oil spot after noticing continued buy pressure around the $79.50 level. Now, let's run through how the week started for us here in this community and what led to the idea of us buying this asset. Now, the first thing we observed at the beginning of the week was the fact that price action was confined within a range with between the $80 level, which happens to be our key level for this week, and of course the $79.50 area to further emphasize the level of indecision in this market. And you all know how we do it in this community when price action falls into this kind of range, and because of this uncertainty, we want to remain patient, waiting for a signal to come, which will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with the scenario we had here, of course, we saw how price broke out of the structure a couple of hours into the New York session on Monday morning, and in fact price moved about, how many pips was that? It moved about 65 pips before the bearish momentum came in, bringing price back into that range. Now, one thing we observed here during our live session yesterday was the fact that price action, as soon as it gets into the $79.50 level, we saw how it became difficult for sellers to break through this level. At every point in time price comes into this area, we saw buy pressure emerges from the zone to further emphasize the strength of the buyers within this range. And as a result of this, we said we will remain positive for buying opportunities. As long as price breaks out of the $80 area, we shall be capitalizing on buying opportunities. Now, during our live session yesterday, we said we are going to be on standby above the $80 level to capitalize on an uptrend. Now, we saw what happened here prior to our live session yesterday. We saw price break out of the structure, and I told us all yesterday that we need to move our stop losses to break even, securing this current position. In fact, price came back, break down into the entry point. We were taken out of that position at break even, and about 3 to 4 hours into the New York session, we saw our price action climb back above that $80 level one more time to inside the current bullish momentum we are currently enjoying in the market right now. For those who took advantage of this opportunity, well done to you for being on standby, as you currently have, if you're taking advantage of the 80 breakout of the $80 mark, you currently have about 135 pips in profit. Then remember that we talked about adding more positions at the breakout of the $80.60 level. And in fact, if you are taking advantage of that one too, you will currently be running with about 80 pips in profit. So we have a total of over 210 pips in profit at this point in time. Once again, congratulations to you and well done for being on standby to capitalize on this move. Now, if you still have a buy position running at this point in time, you know how we do it. The next thing we want to be doing right now is to ensure that we move all our stop losses to secure this current buy position. And of course, we do want to be giving enough room for price action to breathe. And in that regard, I'm suggesting that anywhere below the $81.20 level, and of course the $80.90 area seems most appropriate to lock in some profit at this point in time. So on all the buy positions, let's move our stop losses, secure those current positions, and remember that we always want to give enough room for price action to breathe. Now, with the current position well secured, what is going to be our next line of action for today's trading session? Are we going to continue to buy the US oil spot, or is there a chance that price could do some retracement before an uptrend continuation happens? Now, before we go into the details here, I would like to refresh our memories as regards to what we were able to spot here during our live session at the beginning of the week. And for those who are not part of the live session, this is a privilege and an opportunity for you to be on the same page with us. So the first thing we did at the beginning of this week was to look at the 4 hours time frame, where we were able to spot how price action has been playing out on this current market structure. Now, one thing we did here was to take into consideration the nature of price action since the mid-month of June, and in fact it was quite obvious that price action has been very, very bullish. And to emphasize the strength of the buyers here, we connected the series of higher lows to give us an ascending trend line to work with. Now, in addition to this ascending trend line was the key level at the $78.50 level, which has been a major determinant of price action since the mid-month of July. Now you can see how since price broke out of this level, price had remained above the structure to further emphasize the strength of the buyers. And at every point in time sellers try to break through, it has been met with strong resistance from the buyers, as you will see here. And in fact, during the course of last week's trading session, despite the strong bearish signals, we saw how it became difficult for sellers to break through that area, hereby giving us a platform, a demand zone that might be a platform that will send price climbing to find new highs. Now, with the scenario we have here, in anticipation of this new week, we were acknowledging that because price still remains above that demand zone, the chances of price action to continue to find new high is very high in this market. So we had the key level at the $80 mark, which we said we were going to be using to guide our trading activity for this week. And one thing, of course, we want to be looking out for to buy is for price action to break out of that key level. And when price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. And interestingly, the key level also shares a confluence with that descending trend line here, as you will see. And of course, when price broke out of that descending trend line, it was a clear sign that the trend line may no longer have the capacity to continue to negate that bullish attempt, which further strengthens our buyers to go bullish on this asset. So with the information we gathered here on the 1 hour time, on the 4 hours time frame, it was clear that we want to be getting ready to buy. So what we needed to do then was to scale down into the 1 hour time frame, where we looked forward to see how market participants is reacting to this $80 mark. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly, which of course I've emphasized earlier. As you will see here, we saw the range, price remain above the $80 level, and since then we saw the breakout of structure, which gave us the privilege to join that momentum. Now, with the scenario we have here right now, and considering the strong bullish momentum since the beginning of this week, I'm of the opinion that the likelihood of price action to continue to find new high is hereby increased. Now, how do we want to be joining this uptrend continuation? There are two ways to which we can join this. Now, the first thing here is we want to acknowledge this level, that is the $80.50 level, which was identified on the higher time frame, as you will see here. And then the $80.60 level, which was broken during the later part of the New York session, as you will see here. And we all know that from a technical standpoint, when price breaks out of a key structure such as this one, there are chances that we could have some retracement back into structure to incite an uptrend continuation. However, it's not all the time this kind of scenario happens, so it's just something we need to keep at the back of our mind, just in case selling pressure comes in. If it does come in, we then want to see how the market will be reacting to that $80.60 level to see if we can have buy pressure to incite an uptrend continuation. So that is one way we are going to use to capitalize on an uptrend scenario here. However, if price does not drop that far and instead it continues to find higher highs, then a breakout retest of the $81.50 level will be welcoming more buying opportunities. Now, there is a caveat to taking advantage of buying opportunities above the $81.50 level. So there are two ways to it. Now, for those who have been part of this profitable journey since the beginning of the week, that is, if you had bought since the beginning of the week and you still have a buy position running, you're profitable so far, then you can afford to leverage on the profit you have made so far to test waters above the $80.50 level. So you can afford to have your buy stop order above the $81.50 level to capitalize on that uptrend continuation. However, if you are new with us here today and this is going to be your first time taking an opportunity on the US or spot, that is, you're coming in from a clean slate, then I will be suggesting that you remain patient here and wait for confirmations to happen. So as soon as we have a breakout of structure, scale down to your lower time frame. It could be the 10, 5, or even 15 minutes time frame to look out for signs that sellers are finding it difficult to drop below the $81.50 level. In fact, even if they drop, they are finding it difficult to stay below that area. And of course, this would reflect on the chart as price coming back to retest structure, continue buy pressure around this area with some touch of higher lows to give us an opportunity to join the uptrend continuation. So this is how we are going to continue the uptrend scenario here in this particular market. So let's see how the market will play out going forward. And we already have a simple setup that we can use to guide our move. So our center of focus is going to be between the $81.50 level and the $80.60 area, where depending on how price action reacts to this range will determine what our next line of action will be. So a quick recap here. So we said we are looking forward to some potential retracement into structure. It might not get that far and it can even get as low as that area. But one thing for sure here is we look out for patterns that support that the price is going to the upside. And this would be like a double bottom, head and shoulder pattern, falling wedge, or whatever reversal pattern you can think of to join that uptrend move. However, if price does not drop, then a breakout of that structure retest will be all we need to be part of an uptrend continuation. So on this market structure, I'm still holding on to a bullish bias in this particular market. So this is my view here on the USOIL spot for today. If you have any questions as regards to what I just illustrated, feel free to let me know in the comment section by dropping in your inquiries.